Okay. So now we create one line called balance carried down, right? So we have what have we done? We've identified a cash account, right? We've taken one ledger account. We figured out that the debits are greater than the total credits in the account. Hence, we are going to basically net off the account, right? We're going to have one line which represents the net balance in the account. And what is the net balance in this account? If you look at it, the net balance is total debits minus total credits, which is 9,48,750. Right. I'll just keep this as the value here. Okay. So the net debit is 21 lakh minus the sum of all of these, which is 9,48,750. So what does this line represent? This line represents that the net balance in the cash account is a debit balance. Okay. Interestingly, you will note that when you close an account, if the account has a net debit balance, you will end up passing a line in the credit side to balance it out. So basically, you can think of it this way. I have too many debits, so I'm going to create a line or I'm going to add a line on the credit, the opposite side, and insert the difference value so that both the sides are equally balanced. So now this process is called closing the ledger account. Okay. Now let's try this again for another account. Let's take our SBI bank account, right? So what has happened? SBI bank account is typically an asset account. So I will expect an asset account to typically have a debit balance. Okay. So here we have 59.8 lakhs worth of debits, but we only have 28.75 lakhs worth of credits, right? So the debit side is more. So I'll have to pass a credit entry to balance of the difference. Okay. So what does it happen? How does it happen? By balance carried down 28 lakh. Sorry, that's the amount here minus the sum of all these numbers, right? So the closing balance so basically the bank balance I have after getting all this money and after spending all this money, these amounts is 31.04 lakhs. Okay. So this way, what you should do is you should go about and balance every account. So in this case, excess capital account. So I have a total debit of 0, right? And a total credit of 30 lakhs. So what does that mean? It means that I have to balance it with a debit entry to balance carried down 30 lakhs. Or if you want to go the mathematical way, you will go 30 lakhs, but you don't have any items on the debit side. So basically the amount is 30 lakhs. So what do we mean with the idea that balance carried down? We mean that the next day, the opening balance in a respective account will be 31 lakhs. So for example, so let's say that this ledger represents all the transactions that have happened today on 1st May. Today, at the end of today, you want to know what the remaining balance is in your account. What is the bank balance they have? So you go ahead and close the ledger and you will figure out that you have 31 lakhs left in your account. So tomorrow, what you do is you will be, let's say that tomorrow you're opening the account fresh. As in, it's the same account, you're opening it a new page, right? What you will do is you'll simply go to the debit side and write to balance and write brought down, right? You're bringing the balance down from the previous page to the next page, from the previous day to the next day in this example, right? And that's basically the same amount. So if you were to close that account at that moment, right, what will it be? You have 0 transactions the next day and you have an opening balance of 31 lakhs. So the net debit balance will still be the same as the previous days, right? So typically we close an account on 2 occasions, okay? So if you have the question, when do we close ledger accounts, right? We always close at end of accounting year, which means on 31st March, or if you're accounting year, if you're following an accounting year for preparing your accounts, that is 1st April to 31st March, you will end on 31st March. Or if you're using the calendar year, you'll end on 31st December. So on that date, you will close all the accounts. Or in school, if you notice, you will actually be using these notebooks which have the ledger format printed on them, right? You will have all these different columns printed in the rows in the notebook itself. So to take the account balance to the next page, right? So another thing you will notice is, or rather to learn, is when you have an asset account or liability account, right? So in this case, what we have, cash and SBI are asset accounts, and excess capital is a liability account, right? You will use the concept called balance carried down, or okay, or to balance carried down or by balance carried down, based on which side you're debiting or crediting. However, if you have an income or an expense account, let's see an example, purchases account, right? Or in this case, let's take salary account. You will not take this balance forward. You will be taking this balance to a place called profit and loss account or trading account. So we will understand where it goes, but as I'm just telling you, the rule is carrying balances forward only happens for assets and liabilities. So, and I'm talking about at the end of the year, right? At the end of the year, carrying balances forward happens transferring to P&L trading account only happens to income and expense accounts. And when I say income and expense, obviously losses and gains are covered, okay? But if you're considering taking the account balance to the next page, all types of accounts will have the concept. So as of now, just get this two lines into your head, but I will elaborate once we go forth as well, okay? Because you don't know why we are doing this yet, so it might be a bit confusing. But once you get that, you'll be able to appreciate why this happens at the end of the year and whatnot. Okay, so I'm going to go ahead and tell you that I've already balanced out every account. Okay, so maybe I'll just give you a random check every now and then. For example, service income account, right? I only have one credit, which means that because this is an income account, and in this case it's service income, I will explain later why, but I'm going to take this to my profit and loss account. But this is a, similar to the process of closing the account. This will be done on 31st March, okay, 31st March 2020, for example. And the amount is obviously 1,60,000, where you're balancing the account, okay. So once you're finished with balancing all the accounts, you are going to prepare something called a trial balance. Okay, I'll make this bigger. So how do you prepare a trial balance? So what you do is go to the first account you create, okay, ledger account. So you know that this is a cash account, asset account. And what do we learn? The moment we look at this, we should know, okay, I have the balance carried down written on the credit side, which means the account has a debit balance of 9,48,750. So go to your trial balance. This is the format. Serial number, the particulars will have the account name. Okay. And you'll have a debit column, the credit column. Basically, it represents the balance in the account. And the top you'll write trial balance as on 31st March 2020 or whatever date you want. Okay. The date that's given in the question. So this will be written on the top. So as of that date, what are the balances in the accounts involved? That's what you're asking now. So cash account. What did we see? Cash account, it has a debit balance. So guys, don't get confused thinking this is a credit balance. We are balancing the excess debit by creating an entry in the credit side. So the moment you look at an account and you see this line, look at which side it is on, and you automatically will know what is the excess balance. As in, the term you use is the cash account now has a debit balance of 9,48,000. That's the way you pronounce it. Okay, that's the way you say the word or say, like communicate the balance in the account. It has a debit balance of 9,48,000. Right. Similarly, what did we learn? SBI has a debit balance of 31,04,000. So let's look at some other interesting account. Let's say let's take check in hand. Okay. So what did we learn about check in hand? So this account does not have a closing balance because the debits and credits perfectly match. Right. So some accounts will have a nil balance, and that's okay, not a problem. So once you're done with this, you should have a trial balance a tally. So in this case, why it's not tallying is because of this entry, if I'm not mistaken. Just a moment. Okay. So I might have missed something, guys. I'm sorry, but at the end of the day, this trial balance is going to tally. Okay. So I'll just start one thing where I'm going to just give me a moment. Yeah, see, I might have changed something before, but at the end of the day, your trial balance will tally. Okay, which means the accounts which have debit balances and the accounts which have credit balances will at the end of the day match up. Okay. So if you want to get an idea about why I'm talking about debit balances and credit balances, okay, I'll give you an idea right now. Let's put it this way. So what do we know as of now? We know that some accounts have debit and credit balances, right? So let's say I'm going to see only the debit balances. Okay. So look at all these accounts that have debit balances. Let's analyze them. So if you notice, this is asset, expense, asset. So it's a debtor, right? So debtor is an asset, expense. So you notice all of these are either assets or expenses, right? All of these are expenses if you notice. Depreciation is an expense, right? And then let us take a look at the liabilities of the credit part there. Okay, it's either a liability or it's income. Sales is an income, service income, right? Payable, compensation that we have received, right? Interest, which is again income, a loan liability. So, and in this case, we have mentioned that this is minus 50,000 in this side. So that was the problem here. Uh, okay, just give me a moment. Uh, so at the end of the day, you have all your assets and expenses which have debit balances, and all your liabilities and income which have credit balances. Okay. So this is the basic idea of a trial balance. So if you are able to appreciate this idea, I'll be able to go ahead. Any doubts as of now? It can even be really stupid, I don't mind. Because basically what I'm trying to tell you is we have prepared ledger accounts, we've posted all the entries. Now we are going to find the net value of a debit account, the net of debits and credits, right? So you can let's presume that debits and credits are positive and negative numbers. So if I give you 25 positive numbers and 31 credit to negative numbers, so you're going to add and subtract them accordingly. At the end of the day, after adding and subtracting them, you'll get either a positive number or a negative number. Similarly, once you net off the ledger accounts, you'll either have a debit balance or a credit balance. This balance, you go ahead and you prepare a trial balance and you basically input it as a line. And once you've posted all the accounts in the trial balance and like created all the debit and credit items, if you total it up, those two items, those two columns will match. The debits and the credits will match, and that's how you know that you've done the posting properly. Any doubts as of Precisely, yeah, right. While posting itself or while creating the journal entry itself, you would have known that cash account is an asset and purchase is an expense. So that is based on what we already know. That's not a problem. Okay. So here is where I'm going to give you a twist. Typically, in your exams, right, you will either be given journal entries and asked to post ledger accounts and go up to a trial balance. Or the second type is you will be given a trial balance. You will be given one more piece of information called closing inventory. Okay. And they'll give you a value. Let's in this take example of 10 lakhs. I'm just taking an example. We may have to change this number later. Okay. So they will give you this in the question. Don't need to worry about it, right? So they'll give you a trial balance. They'll give you a bit of text. Maybe there might be adjustments. We'll go into adjustments later. As of now, they'll give you a trial balance. They'll give you closing inventory. Maybe, okay, they might, and they will ask you to prepare the trading account, profit and loss account, and a balance sheet. Okay. So if you are able to appreciate it, look at it this way. Until now, we had transactions, and what did we first do? We prepared journal entries, and that just seemed to be an exercise where we were supposed to follow 3 steps and basically set instructions, right? What were the instructions? The instruction said debit accounts, credit accounts. That's it. It just told us to do something. The ledgers were a little bit more helpful because they gave us what you might call like a statement, right? They told me how I got my money and how I spent my money. It was a little bit more informative. But now, what we are going to do with the trial balances, we're going to get a more, even a lot more powerful information from this. That is, what we are going to do now is we're going to figure out what is my profit. That is, we're going to get all our incomes and expenses in one place and figure out the net profit. And we're going to figure out what is the value of the assets I have and what is the value of the liabilities and what is the net worth. So don't get tense again. This is what we're going to do, but I'll show you exactly how we're going to go through it. Okay. So now, guys, we finally come to our trading account, our profit and loss account, and balance sheet. Right? So these are the 3 accounts that you'll typically see in class 11. I don't expect you to see a manufacturing account. So before I get started, learn that trading account and profit and loss accounts are nothing fancy. They are also just ledger accounts. Okay, which means they work on the same rules. They have the same formats, and they're just ledger accounts, except you use the ledger accounts only at the end of the year. Okay. So let's go ahead and create these 2 ledger accounts. So we have trading account and profit and loss account. Hey Nikhil, so I'll just give you a very quick, maybe 20-second recap, right? So you had basically been requested to post all the journal entries, right? So once you're done with posting all the journal entries, you will go ahead and close each and every account. So I covered how we close each and every account. You can maybe check out the YouTube video later once I post it, right? So basically, let's say that you have a ledger account and it has a debit balance and a credit balance, and these two are obviously not going to be equal, right? So you're going to net it off and decide what is the net balance, which could be either a debit or a credit balance. So in this case, we notice that this account has more debits than it has credits, right? So we go to the credit side, which is the side which has lesser, and we simply create an entry called balance carried down, and we post the difference. Right. So we look at this line and it helps us understand what the net balance is. In this case, the cash account has a net debit balance of 9.48 lakhs. So we create an entry in the credit side to help us kind of balance it out. We have too many debits, fewer credits, so we want to add a credit to balance it out. Okay. So once we do it, we prepare something called a trial balance. A trial balance is basically a statement with 4 columns, right? You'll have your serial number, all the accounts that you've opened, and the net balance that you have in each and every account. So in this case, cash had a net debit balance, right? Too many debits. which is how we want the cash and asset account to be. So we'll write cash, and under debit, we will write the closing balance. Okay. So once we're done with this, the total debits and total credits will match. And that's how you know you've posted everything properly. Now we are going to go ahead and prepare our trading account, profit and loss account, and balance sheet. So guys, first I will give you the format. It will be really helpful if you could note it down. If you can note it down simultaneously, well. Or anyways, I'm going to post this in the Google Classroom. You can always go back later and copy it and to go through it and whatnot. Okay. So if you remember in the first class, I was explaining something about how we arrive at profit or how we arrive at stock and whatnot. Not a problem. Okay. So I will explain, or I would rather re-explain the concept now. Just tell me whether you're able to appreciate the concept or whether you're not able to understand it or not. And then I expect you'll be surprised that you'll be able to apply the same concept in what we're going to do right now. Okay. So let us say that I have, I'm already running a business. So I have opening stock of 1 lakh. Okay. Right. And I'm making purchases worth rupees 7 lakh. Okay. And I'm selling goods worth rupees, let's say 4 lakhs. What does this mean? My closing stock, the worth of the goods I have is opening stock plus purchases minus the goods sold, which is closing stock. Right. Alternatively, you would have maybe learned it like this, right? Opening stock plus purchases minus closing stock is equal to cost of goods sold. Or you might have learned it the other way around. Basically, you might have learned as purchases minus sales is equal to closing stock. Right. So basically, what I'm doing, I'm going to take purchases to be. So basically, what I'm doing is I'm taking closing stock from the right side of the equation to the left side, so it becomes negative. I'm taking sales to the right side, except I'm not calling it sales because I'll be selling these goods worth 4 lakhs for rupees 6,50,000. I'm making a profit of 1,50,000 here, right? So I'm going to call this the cost of goods sold. So how does this equation work out for me? I'm going to say opening stock, right, which is 1 lakh. 1 lakh. I can actually just go ahead and do that. Plus one of the purchase, 7 lakhs. Right? Minus my closing stock is 4 lakh. And what does that give me? Four lakhs, right? So I've sold goods worth 4 lakhs for 6 lakh 50. And what I'm getting in return now is the gross profit. And what does it represent? Gross profit is the profit I earned from making trade, as in from doing my business. Right. So in this example, this entire example, I'm not considering what cost I incurred to bring. So I didn't consider carriage inwards. I didn't consider any labor charges I had. I did not consider any expense that is ancillary, that is office expenses, administrative expenses, electricity. I didn't think of any of that. I simply thought about what is the profit I made from just doing the business, right? From purchasing and selling. What is the profit I made from that activity? That's all I'm thinking about. And the gross profit in this case is 6,50,000 minus 4 lakh, 2 lakh 50. I made a huge mistake. That's 2 lakh 50. Okay. Which basically says from simply doing my business, I made a profit of 2 lakh 50,000 rupees. So this is the first idea that you already know that you just need to make, to be comfortable with and to be familiar with right now. Any doubts on this concept, what I just explained? It can be stupid because if you don't understand this, it might be very hard to appreciate the trading in profit and loss. That's why I'm asking. Ajit, you can unmute and ask if you wanted to. Is closing stock just the value of the goods or is it the actual money? I don't understand your question. Could you unmute and ask?
Hey, can you hear me?
Yeah, go on.
Yeah, so you were talking about opening stock and closing stock, right?
Yeah.
Is that actual money that's either in the form of cash or in a bank account, or is it the
No,
value of
this
goods?
represents what you're buying and selling. In this case, let's presume that you're buying and selling tires.
Yeah.
I had 1 lakh worth of tires. I bought 7 lakh worth of tires. I sold 4 lakh worth of tires for 6 lakh 50, and I have 4
Okay.
lakh worth of tires left. So these represent the goods I have, the stuff that I buy and sell.
Okay.
Fine? Not cash, don't worry. Nothing like that. This is literally the stock I have, the stuff that I buy and sell. Can be pens, can be cars, can be tires, laptops, whatever you have. Okay?
Okay. Okay.
Awesome. Anybody else? Any other doubts? Okay. So I'm really happy you understood this because you're gonna like trip your get a massive like highlight when you understand what we are doing here. So the trading account is basically this equation. You, do you want to copy it down or what exactly do you want? Why? You can copy. This is not as important. Don't worry. This is just to be basically. This is all you have to copy down. I'm sorry, not this one. This one. This is literally the only thing you have to copy down because I expect you guys would already know this. This is very basic for you, right? So this is what I'm talking about. Don't worry, right? If you understand this equation, we are gold. Okay. So, and what did we understand? Sales minus cost of goods sold is equal to gross profit. That's what we've done here. We figured out that sales is 6 lakh 50, cost of goods sold is 4 lakh, right? The cost of the goods I'm selling is 4 lakh. So the gross profit is 2 lakh 50. So we are basically creating a trading account which will give us this answer by debiting and crediting different accounts. Okay. So what are we doing? First, we have an opening balance, right? Which is opening stock. This is where you will debit the value of the opening stock. Okay. Next is you debit purchases account. So remember the purchase account I have here. So purchases 9 lakhs will be debited here. So basically what we'll be doing is we'll be taking the amount from here and we'll be debiting the purchases account. Okay. And what is the next thing here? Opening purchase. Closing stock is a negative, right? So you're subtracting it, which means it will be the last entry on the page. Closing stock. Right? So if you notice in our trial balance, we won't have any ledger account which represents closing stock. We will have a ledger account. Wait, so you mean sales equal to cost of goods sold? Uh-huh. Say, I have a pen, okay. So I bought the pen for 10 rupees. If I'm selling the pen for 12 rupees, the cost of goods sold in this case is 10 rupees and the sales is 12 rupees. Okay. Don't the cost of goods sold and sales will consider the same units. Say for example, I sold 25 items, right? And obviously I would have purchased the cost of goods sold will be corresponding to 25 items. So if that's what you're asking, obviously yes, right? I'm selling 25 items for a sale price of whatever we have decided. In this case, I'm selling say 25 items for 6 lakh 50,000. But those 25 items cost me 4 lakh. That's what I'm saying. Okay. So sales is not equal to cost of goods sold. If that were the case, I would have zero profit. Right. So the profit I make is the amount over and above the cost that I'm selling it for. So this is why I told that the closing stock will be given as a separate entry. So don't get confused why this is happening, why we don't have the ledger account representing the. If we solve two equations, that is, no, we don't. These are two separate equations, if you can't possibly mix them together. If you were to do that, yeah, go ahead.
Yeah. The point is, See,
Hmm?
opening stock plus purchases minus sales equals closing stock. Okay, so
Oh, no.
substituting for
Listen, when you're saying
substituting for
less sales, you should not consider the sale value. You should not subtract 6,50,000. You should
okay.
subtract 4 lakhs, right? Do you get that?
Yeah, I do get that. Yes.
So this is just to make you understand. This is the right way of saying it, or rather, I should in fact put it as cost of goods sold. That's the right way to say it. Because the moment I say sales, you're going to think of I sold it for 25 lakhs. You're going to put the number 25 under minus sales, right? That's wrong.
Isn't
Go
that
ahead.
my question exactly?
I didn't get your question. That's why you're speaking.
Yeah, I see. When we solve these two equations, you had written sales instead of cost of goods sold here in the first equation.
Right,
So that's
okay.
why
Don't worry.
I
Don't
said
worry.
we're getting both of these as same thing.
No. Okay, I'm not going to ignore this because that's why you start to end up with this equation. But again, I think if you're going to go based on the words, you're right, yeah. It's not sales,
Okay, thank you.
cost of goods sold.
Thank
Fine.
you.
No problem. Okay, so we have opening stock, purchases, closing stock. So what will that give us? We have two debits, right? Or two plus, which is opening stock is a positive number, purchases is a positive number, closing stock is a negative number. So the net amount we get in this ledger account will be our cost of goods sold. And we will go ahead and credit with sales account, which will give us the sale amount. And what happens? We will get the net amount in this account as the gross profit. So if you want to substitute these numbers from above over here, right? Let's try to do that to give you an idea. So I have an opening balance of 1 lakh, right? Purchases was 7 lakh in this example. Okay. The sales was 6 lakh 50 and the closing stock was 4 lakh. Right. So like we did before, let's try to close this account, as in balance this account. Okay. So what do I get? I get more credits than debits. So I write the words to gross profit and the balancing figure is the profit I made, 2 lakh 50. Right. So I'll go over it again once so that you're able to appreciate once more if you want. We have these two equations and we're basically representing them in a ledger account so that we arrive at the profit that we've made. It can also be gross loss. In that case, the gross loss will be represented by more debits than credits. It will be the other way around, which means we will be writing by gross loss. Right. The format will have by gross loss and some amount here. So the opening stock is debited, purchase account is debited, the closing stock is credited because I'm reducing it. Sales is similar to a credit or a negative number, okay, because it's a credit balance that's negative. And the net of all of this typically would be credits more, debits less, right? If you are not to pass anything else here, you have more credits than you have debits. So the net value will be a credit balance, right? So you remember when I said income, you should think credit because when income increases, you're going to credit the account, which means credit represents income or profit. That's a gain. Okay, when you're talking about income and expense, as in trading and profit and loss accounts, credits are better. You have more income, you have more gains. So you have a net credit balance, which represents the gross profit. So again, the gross profit simply tells you what the profit is that you've made that corresponds to simply purchasing and selling. So as far as a format is concerned, you will debit. This is the format. I'll just show you the format here so that you can maybe note it down now. So of course, these two will be mutually exclusive. You can't have both a gross profit and a gross loss. Okay. If you have a gross profit, as in if you have more credits than debits, it's going to be a gross profit. If you have more debits than credits, it's going to be a gross loss. Okay. And apart from this, you're going to be debiting all direct expenses. So what are direct expenses? All expenses that you incurred that are directly related to the trade. For example, let's say that you made the purchase and to enable you to sell it first, you should receive the goods to your factory, right? Which means that you should engage a lorry to a transportation service to bring the goods from the supplier's location to our location. So carriage inwards is directly related. It's a direct expense. Think of maybe a laborer who is helping unpack all the goods and repack them, right? So that would mean that I'm going to debit him, which is the labor or salary expense. That is a direct expense. But be careful as to distinguish between direct expense and an indirect expense. For example, if I'm paying an office admin guy a salary, that has nothing to do with this purchase and sale of the goods because the office is a separate place, right? If I'm paying an accountant, if I'm paying a HR guy, that's a different expense. That is an indirect expense. That would come under your profit and loss account. However, direct expenses such as wages that you pay to the factory guys, wages that you pay to the guys who unload and load, anything that you spend to prepare the goods for sale. That is both to receive and prepare. To receive the goods is also a part of preparing the goods, right? So to do that, if you spend anything, that will affect the gross profit, right? The another way to look at it is if you did not spend that money, you can't make the sale. Okay, that's a very crude way, but that's also another way to look at it. Okay, so this is a format for trading account. Okay, so now after we complete the trading account, we will go to the profit and loss account. So if you remember what a carry forward is, right? We will carry forward the balance from the trading account to the profit and loss account. So we write the text gross profit, but it's actually profit and loss account, right? We are passing a journal entry to transfer the balance. So what happens here? I'm saying the trading account. Let's say I have a gross profit. I'm debiting the trading account, right? That's what you're doing here. Which means the ledger account called profit and loss account will be credited. And here you will write gross profit. Okay, which will be the same number here as here. Okay. Or if you're having a gross loss. Yes, because you're reducing the amount of the equation, right? If you notice, you're reducing closing stock in the equation. So basically, you're removing the stock that is left with you so that the debit balances here represent the cost of goods sold. So basically, I'll put it this way, 1, 2, 3, and 4. These items will represent, or I can even color it for you. Excuse me. So the highlighted items will represent your cost of goods sold, right? So typically they should have a debit balance. This amount will be lesser than the three of these combined. So you'll have a net debit balance. So more credits and lesser debits will mean that you have a profit. Uh, I don't expect a situation where it can be a negative number because think of it this way: I purchased 5 pence, right? I can't sell 6 pence because I only have 5 pence. It can be zero. I'll give you that. It can be zero, in which case that also may not make sense because it can be zero as in I've sold everything I have, which means I will not have a closing stock. Okay. If you take the money now and promise to sell later, you would not have accounted it in sales, which means the closing stock will represent the item now. If you are promising to sell, no, wait, what do you say? If you take the money now and promise to sell later, right? It will be an advance received. If you look at the transaction we've gone through, it will be an advance received because we've not earned the income yet, which means the goods are still with us. It will be part of your closing balance. Okay, but don't go into those ideas yet. We're just trying to understand how to post stuff to the trading account and the profit and loss account. Okay, so we'll get to that idea when we get there. But if you like confuse yourself too much, you're going to take very little out of this than what is operating. So, as I was saying, you debit your trading account, right, to gross profit, and correspondingly you credit the profit and loss account. Okay, and if it were a gross loss, you're crediting the trading account, and you'll be correspondingly debiting the profit and loss. Okay, And in the profit and loss account, you will have all indirect incomes and all indirect expenses. Okay. At the end of this, you'll have credits and debits, right? If you have excess credits, you're going to have net profit. And then if it's a loss, you're going to have net loss. Okay. So this is the amount that you're going to have here will represent whether you made a profit and loss in your business. If you remember, one of the two main objectives of accounting is to A, figure out what the business profit is, and second is to figure out what the financial position as net worth is. So we achieve the first step, as in we figure out whether the business has made a profit or loss by preparing the profit and loss account. Then we go on to the balance sheet. The balance sheet, mind you guys, is not a ledger account. Okay, it is a statement. That's it. It's basically a statement you prepare where you're representing the ledger balances. It is not a ledger account. Okay. So balance sheet as at 31st March 2020. Okay. So what is the format of a balance sheet? It's basically you won't have dates because it's only one date. If you remember, balance sheet is a financial statement that shows the financial position at a point of time, right? So you'll have your liabilities, right? You'll have your assets, and of course you'll have the amounts, balances. So if you remember, we'll have all our assets here, and of course they'll have a total, right? And you have all your liabilities here, and you'll have capital. So one more format that you have to remember here is, think of it this way. So you have capital, okay, right here. You will add or subtract profit or loss. So as of now, don't worry too much. Just if you want, copy it down and just listen to what I'm saying. You will get this will make much more sense when we're actually posting the ideas. And we are so by the end of today's class, we would have made this trial balance into trading profit and loss account and a balance sheet. Okay, so that will give you a much better idea, right? So we will reduce drawings, and that will give you the net amount. Okay, and you have your liabilities here, and you'll have your assets here. Okay, so this is the format. I'm giving you a format sheet, right? Now let's actually go ahead and solve a sum. Okay. So guys, if you're not copied the format yet, again, don't worry. This is the format. You can copy it later. We'll have, of course, we have numbers here if you want to complete the format. Okay. So let's try that. So what we're going to do now is we're going to take each and every account in a trial balance and try to fit it into these three statements that we have. Okay. So I'm going to remove all this stuff so that we don't get confused anymore. We'll read it in the format so that we don't get carried forward or too lost. Okay. Okay, let's get started. What do we have? Cash account. So cash account is going to go as an asset, right? So my balance sheet, my first asset is cash account. You don't write account in the statement because it looks a bit messy. At the end of the day, it's a statement, right? So as long as you just represent the asset, it's fine. So cash, what's the balance? 9,48,750. Purchases, 9 lakh. So where do purchases go? Purchases go in the trading account. Purchases 9 lakh. Next is machinery. Machinery is an asset. So go to your balance sheet, right? And the amount is 7 lakh 20. Gentle Limited. Gentle Limited has a debit balance. So by that itself, we can say that they are a customer. So Gentle Limited, right? Right. Legal expenses. So think now. Is legal expense a direct expense or an indirect expense? It has nothing to do with purchasing and selling, right? It has more to do with like conducting the business. So it is an indirect expense. Again, I'll give you a fair disclosure. I don't expect you to straight away know on an expert level what are direct expenses and what are indirect expenses. You will get that once you start doing a lot of sums, and you will suddenly able to understand why something is a direct or indirect expense. Okay. As of now, just listen to the logic that I'm giving you, and if you're able to appreciate it, great. Else, keep persevering. Okay. So legal expenses, it is an indirect expense. It has nothing to do with purchasing and selling of my goods. So I'm going to go ahead and record it in my profit and loss account. So in my profit and loss account, right, I have my indirect expenses. So obviously I won't type indirect expense. I will write legal expenses, right? And I'm going to debit it with the amount furniture and fittings. Asset. So go to balance sheet, right? Furniture and fittings. So as and when we go to each and every account, try to kind of follow, like come along with me and figure out where it goes. So if you look at both of these are assets, right? So go ahead and record them in your balance sheet. So fixed deposit is an asset. My uh, customer, right? Again, asset. Ad expenses. Again, this might be interesting. Advertisements. You may say that, well, I do it for I give an advertisement because I want to sell my products. But think of it this way: if I don't receive my goods, or if I don't make a purchase, I won't have anything to sell. But if I don't make an advertisement, I will still be able to sell my goods, right? I just have to find a customer. So it is not directly related to the sale. It is indirect. It is to facilitate the sale, right? If I give out flyers, if I make an advertisement on television, it simply facilitates the fact that I'm going to get a sale. However, it is not a direct expense. So advertisement expenses or indirect expenses which go in the profit and loss account. Okay. Okay. Technical know-how, which is an asset. Okay. Mr. Chaturvedi, debit balance is an asset. Wages and salaries. Okay. Now, if you look at the text I had given, I would have simply said salaries paid, right? So here we have an interesting place where we can either make a presumption that I paid the salary to somebody who is working in the purchases department. So it's a direct expense. So it goes in the trading account. Or you can also say, no, I paid the salary to a person who is in my sales department or in my, let's say, accounting department. So it's an indirect expense. So it goes in a profit and loss account. You can argue both ways. So I'm going to give you a little piece of information paid to HR and finance. So you don't get ambiguity. I know that these two are indirect, like departments that are not directly related with the purchase and sale. So this balance is going to be an indirect expense. Okay. To wages and salaries. Okay. EB charges. Again, has nothing to do with my purchase and sale. Rental deposit. It's an asset. Goes in your balance sheet, asset side. What else do we have? Repairs and maintenance, stuff to do with the machinery, nothing to do with my sales, an indirect expense. Packing materials. Now, obviously, stuff that I, like manufacture or stuff that I trade in, I'm going to pack, and packing has to be done when I'm making a sale, right? I can't sell a product without packing it first. So it's a direct expense. Okay. So packing material goes in the trading account. Right. Depreciation. Depreciation is an indirect expense. It represents the obsolescence or basically the decay of your machinery. Or if you remember how I explained depreciation before, it represents the that accounting year's equivalent charge in the cost of the machine. Never mind, at the end of the day, it's an expense, an indirect expense. So it goes on your profit and loss account. So it's depreciation on machinery. Right? And you have interest expenses, water expenses, carriage outwards, rent expenses. All these four are indirect expenses. Let's go through them again. Interest, water, carriage outwards. Remember, carriage outwards, again, you can argue that boss carriage outwards is something that I'm still using to make a sale, which means that I'm going to be going ahead and using that as part of my gross profit. However, when I say direct expenses, I'm going to go ahead and say those expenses that I incur to simply bring the goods to my location. Right? So the moment that the goods are available for sale, I'm not saying to make expenses incurred to make the sale. Expenses incurred to make the goods available for sale. So carriage inwards, I have to incur the expense to make the goods available to me, to bring them to my location. They're relevant and direct. But for me to incur the expense to make the sale, right? That is not a direct expense because that expense does not form, come under the criteria expense incurred to make the goods available for sale, right? So it's an indirect expense. We go ahead and put them in the profit and loss account, right? Rent expenses. Carriage inwards, as I said, it goes in your trading account. Okay. Income tax expense, sponsorship, depreciation, donation, insurance, interest, telephone, all of these are indirect expenses. So we go ahead and pop them into the profit and loss account debit side. Okay, so we're done with all the debit items here. Next, let's move on to the credit items. Mr. X's capital account. Okay, what do I know? I know that capital it's not a liability. If you remember, it's called equity, but it goes on the liability side. So in fact, you actually call the side equity and liabilities. In school, they'll simply teach you as equity side. Okay, sorry, they'll call it liability side, but the right name is equity and liability side. Okay, that's the left side. The credit represents the credit balances. Capital goes here. 30 lakhs. Okay, so Intel Corp, X Limited, Gentro Enterprises. Sales. We know sales goes in the credit side of our trading account, right? Right. Mr. Ravi is a liability. So Mr. Ravi, 60,000. And service income. Service income is not a direct income, right? It's not a sale. So it comes under indirect income, which is under profit and loss account credit side. Okay, just a minute. Can you guys hear me better now? Yeah, just a minute. Hello? Yeah, okay. Okay. So under indirect incomes, what are we seeing? Service income, right? And here it goes. Here, right? So check in hand has a little balance, so it does not go anywhere, right? You can say that check in hand is like an asset account, so it goes in the balance sheet, but if you recollect, a balance sheet is basically a statement you're going to show to the user. So this piece of information is not relevant to the user. They don't need the fact that these two accounts are there with a little balance. It's not necessary. So you can skip those two accounts. So compensation for defamation lawsuit, which is an income, right? It's obviously an indirect income. So defamation from, sorry, I will stop text here. Okay. And the amount is going to be on the credit side. What else? Nil. Interest on fixed deposit, which is an indirect income. Okay. Loan, it's obviously a liability, so it goes on your balance sheet. Okay. Okay. All these are nil accounts. Installation service income, so it's an indirect income. Again, guys, don't get confused with thinking that it's indirect income, so it goes on your trading account. You could, at a future point of time, start to argue that installations income or installation service income is a part of your sales. But for now, I don't want to confuse you, because in school you won't have this sort of an explanation where they'll teach you about whether an income can be direct or indirect. You won't go that deep yet as far as class 11 is concerned. So simply just go ahead and credit your profit and loss, unless you're taught otherwise. Okay. So as of now, I'm just giving you the basic idea. So the last step we have is SBI bank account, which is having a debit balance with, it's an asset, right? So 31 lakh 4,000. So now we have finished the entire trial balance. So we have one piece of information left. Guys, never forget closing inventory. More often than not, in your exams, there is a very good chance you might actually forget this line is there, and you will end up with a huge mistake, because you would have forgotten that this line exists, but your answer will still tally. Okay, if I were to prepare my accounts right now, the answer will tally, because I've posted debits and credits from the trial balance, which is tallying, right? So the answer will tally. I can actually show it to you guys, right? So what do I know? I know that my total credits. So we start with the trading in account, right? Total credits is 22 lakh 50,000. Total debits is 10 lakh 33. So I have credits over debits, which means I have a gross profit, right? So the gross profit that I've made is 12 lakh 16,000. Okay. So I know that I've debited the trading account, which means I have to credit the profit and loss account, and the profit and loss account to basically get the amount from that. It's basically a carry down, right? So now the total credits I have is 21 lakh. The debits I have are 16 lakh. The total expenses that I've incurred during the year. Okay. So which means that I have again credits over debits, which means I've made more income than I have spent money. So the net profit is. Hey, does anybody have a doubt? Yeah. So the net profit is 4,84,000, which means we've gotten our first answer. We've made a profit of 4.84 lakhs from doing our business in the current year. Okay. So now this profit. So if you remember, I told you that when a business makes profit, it's made business. The business has made profit because it has got money from the owner, right? So it has to give the money back to the owner. It owes the profit to the owner, right? So you will add this profit to your capital. And in this case, we don't have drawings. So 0, right? So what happens? Capital plus profit minus drawings is 34,84,000. And your balance sheet is tallied, right? So what does this represent? It shows us that we have a total asset balance worth of 70 lakhs and we have liabilities worth 35 lakhs. So the